Thank you.
Good afternoon, and thank you all for joining us today. I am NIN Desai, and I will be your host. Let's start with my background. I started my professional career at Merrill Lynch with their private client group. At Merrill, we manage portfolios of high net worth individuals. While it was great to trade stocks and bonds, I was always curious about how these companies went public. Thus, after business school, I joined Pacific Crest Securities. PCS is a tech-focused investment bank with global presence on software, communications, semiconductor, internet, and digital media. Here are a few transactions I worked on at PCS. In 2005, IPOs were at the peak, and it was an amazing time to take all these companies public. But that led to another question. How do VCs know what companies to invest in and which ones to take public? Thus, I joined Alpha Capital Partners. Alpha is a generalist fund with about $135 million of assets under management. My most recent transaction at Alpha was Circon, a software as a service provider company. During my time at Alpha, I realized how inefficient the fundraising process was, not necessarily at Alpha, but in general. That's how NIN Ventures came into existence. NIN Ventures is a first of its kind technology venture capital fund to be marketed, raised, managed, and reported online. The general solicitation and general advertising under the Jobs Act and Rule 506C of the U.S. Securities Act made it possible for us to raise this fund. This rule came into effect September 23rd, and we were the first ones to go live with a website and videos about our call. We also became the first venture capital fund billboard to be seen, which was followed by in-taxi ads and other social media facilitated marketing. So what will NIN Ventures Technology Fund invest in? The fund will invest in Series A and B rounds and write a check anywhere from $1 to $5 million based on industry, sector, and stage. Our primary focus is on financial services technology, education software, internet and digital media, mobile communication, cloud computing, 3D printing, and other path-breaking sectors within the United States. Let's start with the basic question, why venture capital? Historically, if you look at U.S. Venture Capital Index and S&P 500, you'll notice U.S. Venture Capital Index tends to outperform the S&P 500. And not only that, they have an inverse relationship. So what does that mean? For example, your traditional portfolio consists of 70% stocks, 20% bonds, 10% money market investments. With addition of venture capital, your portfolio can now be 60% stocks, 20% bonds, 10% money market, and 10% venture capital investment. This is being conservative. The addition of venture capital will not only help you diversify your investment, it will help you mitigate the risk given the inverse correlationship between S&P 500 and U.S. Venture Capital Index. So why venture capital and what is our strategy? Our strategy is to invest in early to growth stage path-breaking, technology-focused companies. If you notice, from 2002 to 2012, technology investments have dominated the venture capital industry. And the highest amount of venture capital funding occurred in early to expansion stage companies. If you notice, from 2002 to 2011, sector-focused funds have outperformed generalist funds. And technology sector has outperformed the rest of the U.S. Venture Capital Index. This is a very important graph to look at, by the way. With early and expansion stage companies yielding the highest returns. Thus, NIN Ventures will invest in path-breaking, early to growth stage technology companies. We will not only provide adequate financing, but will lend our domain expertise and network of partners to help companies with recruitment, PR, and marketing, and a viable exit strategy. The strength of our team, the value of our network, and our funding model that's designed to reduce management costs creates this unique investment offering. So who can invest in the fund? One must be an accredited investor and verify themselves as an accredited investor before they can invest with us. An accredited investor is an individual with an income of more than $200,000 per year, or a joint income of $300,000 in each of the last 2 years, or has a net worth exceeding $1 million either individually or jointly with his or her spouse, excluding the primary residence. For an entity, its total assets in excess of $5 million. There are multiple ways to verify if you are an accredited investor. For example, for an individual, it will be income, asset, or third-party verification. For an entity, it's asset and third-party verification. Credential is our most preferred third-party verification method with a simple and confidential process at a click of our button. There are multiple ways to invest in NIN Ventures. You can use either your checking account, a defined benefit plan, or a self-directed IRA. While using your checking account, it's as simple as making an online purchase where you provide your routing, checking account information, along with the amount you wish to invest. A defined benefit plan is a retirement plan that can invest in a wide range of securities and investment products, including venture funds. I will now pass on the presenter role to Robin, who will talk a little about RSW and our association with them. Off to you, Robin.
Hi, good afternoon. So we're talking about a way to invest in NIN's fund, but using pre-tax, tax-deductible dollars if you're self-employed. So what does that mean? Doesn't matter if you're a C Corp, S Corp, sole proprietor, partnership, or an individual. To the extent that you have business income, you can establish a retirement plan. That plan could either be a 401k profit-sharing plan or a more complicated, robust, defined benefit plan. In any of these plans, any contributions that are made are a top-line tax deductible to the business entity. And out of that contribution, you have a wide range of investment options, including NIN venture funds. So what, in essence, you're doing is tax-deductible investing inside of a retirement plan. There are many advantages of doing that. Besides the tax deductibility of the contributions, you'll be saving tremendous income taxes or business taxes based on the type of structure you are. As an example, if you're a corporation, whether it's a C or S Corp, and let's say at the end of your year you have a $200,000 profit, you could have a plan design that puts the entire $200,000 into this retirement plan, and all of the contribution be used in NIN venture fund. That makes the investment in the fund a tax deduction to the company. All of the earnings in the fund are tax deferred. You pay no taxes on the earnings as the account continues to grow. And at some point in the future, when you retire or terminate your company or terminate the plan, you can roll the money from the retirement plan into an IRA and still stay invested in NIN venture fund and not pay any taxes at that time, basically defer the taxes. So although a retirement plan allows a wide range of investment options, you can see from the slides, from equities to debt instruments to insurance products, it's generally speaking, a defined benefit plan will allow you to contribute substantially more money than what you can do in a simple, in a SEP, or even in a basic 401k profit-sharing plan. The complicated calculations are done by enrolled actuaries, and that's what our company is. We're an association of enrolled actuaries, pension attorneys, and CPC, certified pension consultants. We'll help you establish the right type of plan to meet your contribution goals. Whether you want to contribute $20,000 or $200,000, we can help you design that plan, do all the compliance, the annual testing, and all of the government tax forms to keep the plan proper with the government each and every year. Lynn, is there anything else you'd like me to cover in that?
Not at this point in time. I believe we have a few questions, but we'll take them maybe at the end of the call.
Okay.
Thank you very much, Robin. Moving forward, to invest in NIN Ventures using defined benefit plan, you must first sign up on nin.vc and verify that you are an accredited investor. Next, establish a defined benefit plan with Robin, like she mentioned. Once the plan is established and contribution is calculated, you can complete the subscription process on NIN Ventures and then process your payment online as well. We also let investors invest in our fund using their retirement plan. For example, self-directed IRAs. Self-directed is a descriptive term that is used to describe how some of IRA providers administer the assets they hold. With the self-directed IRA, the client controls what their IRAs invest in. Self-directed IRAs allows investors to hold alternative assets within their tax-deferred retirement plan, such as private placement in venture capital. Like any IRA investment, a self-directed IRA has built-in tax-deferred growth, and thus an individual will not pay capital gain taxes on the growth of that investment. The return will flow back to the self-directed IRA and will not be taxable to the account holder. A self-directed IRA allows for true diversification that is otherwise not achievable in a standard IRA portfolio. To invest in NIN Ventures using your self-directed IRA, you must again sign up on nin.vc and verify you're an accredited investor. Next, establish an IRA account with Interest Group, and then complete your subscription and payment process on nin.vc. So let's go through the investment process step by step. The first step is to visit nin.vc and sign up. Sign up is simple. All you need is your first name, last name, email, password, and acknowledge that you are an accredited investor. Once you sign up, you get access to our marketing materials, that is the PPM, investor presentation, and other suggested readings. You also get invited to attend our calls, just like this one. You can also schedule a one-on-one meeting with us at our office or online via Skype. When you try to make an investment, accept the risk and disclosure statement that will explain what venture capital investing is. The next step is to verify accreditation. Once all that is in order, it's only a matter of filling out a subscription document and a W-9 form. The last step is payment, and it's as simple as providing checking and routing number that you wish to invest. Please note that venture capital is a high-risk, high-reward investment vehicle, and we strongly recommend reviewing our other suggested reading on our website before making any investment decisions. On that note, we're open to questions. Please type your questions in the chat box, and we'll make sure we answer them all. Robin, I believe we have a couple questions that might be directed toward you. What is the difference between defined benefit plan and defined contribution plan?
Okay, thank you. There are only two types of retirement plans in America, defined contributions and defined benefit plans. Defined contributions are the 401ks, the profit sharing, the simple, the SEPs, and that's where the government defines the contribution as a percentage of salary, the maximum being 25% up to $52,000. The defined benefit plans are the opposite. These are the plans that teachers, government employees, firefighters have, and they define the benefit. It's based on paying you either a monthly benefit for life or the lump sum equivalent based on a bunch of factors. Factors like how old you are now, how old you are when you retire, your average income over the course of your working years. Generally speaking, like teachers they work 30 years, they're entitled to a percentage of their highest salary for the rest of their life. So an actuary backs into the required contribution necessary to fund that benefit. So if you're 50 years old and you have 15 years to retirement, there's a possibility of contributing much more than the $52,000. And a defined benefit plan generally allows for much larger contributions.
Next question. Again for you, Robin. How can I or my company invest with defined benefit plan? Who will be investing, me or the company?
A defined benefit plan is established by the company, and the owner establishes it. The owner of the company or the partners are typically the sponsors, and they're also the trustees. So it's their job to make sure that the investments are prudent. So in essence, it's the owner of the company who establishes the plan and maintains the investments on behalf of the owners and the participants in the plan.
Got it. Next question. Has NIN.VC made any portfolio investments to date? No, currently we have not made any portfolio investments. Our first initial close is when we'll start making investments. And the first initial close will happen once we reach a $10 million mark. And however, we do have a portfolio of companies or a pipeline of companies that, for lack of term here, a pipeline of companies that we have picked out in terms of investments. I can tell you we are looking at the education software space, we're looking at financial services space, and we are also looking at 3D printing deals at the moment. Next question, who will be sending me quarterly statements, RSW or NIN.VC? NIN.VC will actually be sending you quarterly statements in regards to your investment in the fund. Robin, do you want to answer that question from your side?
Yes, and we'll be sending an annual statement based on the total value of the plan at the anniversary of the plan, which is typically the company's fiscal year end, in most cases December 31st. So in essence, you'll be getting 5 statements a year, 4 from NIN each quarter and 1 from our company as the plan administrator, showing your ending balance at the end of each year.
Any other questions? Once again, thank you all for being on the call. Thank you very much, Robin. Please sign up on NIN.VC to begin. Also, feel free to reach us at contact@nin.vc or 312-953-0930 to schedule one-on-one meetings or for any questions or material requests. Have a wonderful day and happy investing.
Thank you.